next few experts right here in the studios. We'll have Nikunj with us in just a short while for now. Ravi, great to see you in person. You don't come often to the studios, but the budget has made you come here. And as always, Mr. Kedia, shall we start with the song or we'll end with the song?
Later on.
Okay, later on, after the budget. So, Ravi, what do we expect from the budget? Can it really change the mood for the markets?
I don't think. Unfortunately, I think the relevance of budget is going down day by the day. And of course, there are more important events lined up like Fed meet and RBI meet. Those are more market moving events than budget is literally. I think we expect continuity from the budget. As long as there is nothing that rocks the boat, we are fine.
Okay. All is well, Mr. Kedia?
Every time.
Every time,
all is
anytime.
well. And no expectation is the best expectation, okay?
Okay. But having said that, Ravi, is the market a little nervous at all about something on, say, capital gains?
Surely, I think what market expects is maybe there will be some normalization of the period where the long term will be redefined to 2 years. If that is the only thing that happens, I think market will digest it. But if there is increase in rate along with that, then that will be a slight negative for sure. There has been, in my opinion, a lot of regulation and over-regulation towards curbing the market liquidity. So that is leading to, the movement being very, very sharp. So I guess not tinkering too much would be good news.
Right, okay. Here we can see a couple of budget-sensitive trades typically which tend to, react to all the budget announcements. So I'm just going to quickly recap them for the benefit of our viewers. Typically anything on a tobacco tax, ITC, Godfrey Phillips, these tend to be the sensitive names, although it is, nowadays it doesn't happen in the budget. It is, it's taken care of in the GST ambit. Anything on green hydrogen, that's going to impact stocks like Reliance Industries, defense moves. We've already seen how favored the defense stocks have been off late and how they're making fresh highs day in and day out. And of course, the entire EV push, along with the PLI scheme, that's bound to help the entire EV theme. Everything from a Hero MotoCorp to an M&M to a Tata Motors, and of course a whole host of auto ancillaries as well. They will tend to be the sensitive pack in trade today. But while we continue with that, Ravi, what is the best way to play the budget theme, if at all? Or would you say leave the budget aside, look at what your long-term portfolio is supposed to be, look at the India macro picture and base your stock portfolio onto that?
See, budget since last few years has been focusing on capex and manufacturing, and we need to boost our exports. I think that is the number one pain point in our whole economic scenario. So I think our budget will continue to focus on these areas, and I think that remains the best area to focus on from next 3 to 5 years, because the capex cycle is just picking up, the manufacturing cycle is just picking up. So I think that will remain. Only thing is, the burden needs to shift from central government to state government and private sector on continuing with the capex cycle. But I think that those themes will still continue, and budget will give enough incentives for the cycle to continue, is what I feel.
Okay, now let's understand. I'm going to look at the one-year chart of the Nifty. Let's go back to that graph once again. For me, that is the sum and summary of what markets have done in last 1 year. A year ago, close your eyes. Let's go back to 2022. The Nifty in last 52 weeks is absolutely flat. Mr. Kedia, Nifty in last 1 year is absolutely flat, right? The mid-cap index in last 1 year is absolutely flat. The difference is in 2022 budget, expectations were high. Markets were confident that the GDP accelerator would be there. Markets in 2022 Feb had enjoyed a great 2021, so that sugar rush was on. Right now levels are same, but there is no excitement. There is fear in the market, there is no pent-up demand, there is no open interest. Are we getting ready for the next big wave or rally in the market? Pour in your experience, Mr. Kedia. Yes or no?
No, yes, of course. Because it shows, the trailer shows that, as you said, that there is no excitement in the market. People are not expecting so many things to come in this budget. So even little bit of optimism will bring joy in abundance.
Ravi, would you agree with my assessment?
I absolutely agree with that. I think we have been going through a time correction consolidation. We had fantastic gains post-COVID, and we needed to digest those. I think that digestion period is coming towards an end. Whether budget provides that trigger for that next wave, I'm not sure. But sooner or later, even if there is no negative and if the Fed pivots, I think we should be ready for the next move.
You know, on budget day, we always talk about volatility, how to make money. This is Ravi and Mr. Kedia, this is how markets are moved. And Ravi, you want to just see the graph here? February 2% move, 18 2% move, 1.5% move, 3% move, 5% move. Of course, this was because of that COVID multiplier which kicked in, and 2% move. So if I keep February 2021 as an outlier, irrespective of short term, long term, irrespective of the tax regime, fiscal deficit, the average swing on the budget day with one outlier, which does not change your average, is 2%. Is that the sum and story of today's budget? Doesn't matter what the taxes are, doesn't matter which way things are moving. It is a 2 to 3% nifty swing event.
Vijay, you want to go for it?
No, I am optimistic, irrespective of whatever, because people are expecting. Only thing which can dampen the sentiment in capital markets, so far as stock market is concerned, that is long-term capital gain tax. If government tinkers with it, then of course market will fall. But again, I would say that would be a temporary phenomena. Maybe after 6 months or maybe after 3 to 6 months, people will forget that. So I don't know about what is going to happen today. So better I am expecting negative, government will impose tax and market will go down, if you're talking about the today's event. But yeah.
So you know what, my dad had advised me, one, don't trade ever, don't leverage, and especially don't trade on event days, which is like budget days. So unfortunately, I have to say I have no idea what's going to happen, just like Vijayji said. But we have to stay focused on the longer term picture, and I think the longer term picture for India is relatively better than the world. I think some amount of premium that we had to the emerging markets and outperformance has corrected a little bit, but I think soon enough we'll reach a stage from where at least the absolute performance can still come back to the Indian market from here.
Okay, let's go back to that the budget stock wall, and it is just a collection of where the budget action could really move. And I'll talk about themes, we'll talk about ideas. If Mr. Kedia and Ravi are there, I don't know, my viewers just start sending me text messages that ask Mr. Kedia about the next multi-bagger idea and Ravi from the multi-bagger theme. So we'll get into that also. Ravi, this is how we think the stack looks like. If there is an infrastructure boom, L&T would benefit. If there is a push towards alternate energy, Reliance, Adani, to a large extent Tata Power. If tax rates are changed, the immediate push would come into Hero MotoCorp or a Maruti, because the money in hand of a taxpayer, it goes higher. Would you agree with this assessment that this by and large should be the budget collection, a bit of combination of rural, autos and consumption?
No, I agree with it. I think these are the themes actually which are quite already underway. It's already Larson's book is, order book is almost 2.5, 3 years. The book to bill ratio is quite healthy. So, and the execution cycle is also going on very smoothly. So I won't say that this is going to be a fresh impetus. We are already into the cycle, and market has recognized it to a large extent. Maybe not Larsen, but some of the other capex stocks are trading at quite a bit of premium. So defense, capex, manufacturing, these are the themes. See, finally, what are the two areas that is really pinching India? One is that we are importing more than we are exporting, and second is we have to provide employment to many people. So government has to give push to those sectors which will create employment opportunities and create export opportunities. There are many things that can happen outside of the budget which can benefit as well, like signing of the FTAs. I think those are the things that we are really waiting for.
Mr. Kedia?
I think more or less I agree with this, but one sector which is missing here is banking. So I think hike in FPI limit in banks. So banks and NBFCs, I think they should. Yes. So that should also be included. It's a very underweight sector, I think. So this, because without credit, nothing is going to happen.
Okay. There's one more graphic which is about the tax structure in India. As taxpayers, I guess there's always a universal demand, and this is a poll where I get a 10 on 10 every time we do it, that should income tax rates in India be changed. Now that's of course for the STT. We've spoken about STT, that there is a difference in need of the tax versus good to have tax. Indian tax structure is complex, you want to simplify it, but this year may not be the right year in order to make any changes, given that the equity culture in India has just about started. So this is just the tax structure, but on the income tax front also, I'm just going to show that how things in a sense should be changed. Now, if there is a change which happens in the second bracket, up to 5 lakh rupees, then the watchword today could be all the consumption stocks, Hero MotoCorp, Maruti, FMCG stocks, because inflation last 5 years was in a structural decline, but post-COVID is in a structural update. When inflation goes higher, it will cost. the taxpayer. Which means government now need to be cognizant that from a low interest rate and a low inflation regime, we are moving to a high interest rate and a high interest rate regime. So you got to be cognizant of more money going in the hands of taxpayer. Let's take a break. We're just getting warmed up. The finance minister has left for the parliament. In moments from now, which is less than 1 hour from now, she will stand on the floor of the parliament and present her 5th budget. The backdrop of 2021 budget was survival. The backdrop of 2022 budget was revival. The backdrop of 2023 budget is the leap forward. So from survive to revive to thrive, what can she do to ensure that India takes a leap forward? Stay tuned, you're watching ET Now, your budget headquarters, and we're just getting warmed up on our budget coverage.